October 5th. Right now, roughly about an hour after the market closed, try and let it settle in a little bit to get a fresh perspective. Always interesting to see what you see going into the day based on yesterday's close and then how the day unfolded. It's actually a very good habit for you as a trader to actually forecast what you expect to have happen during the day, because you start to build up this kind of a mental bank of confidence and conviction in what you're looking at, because you looked at price action a certain way and then ultimately it either did or didn't unfold that way. And you start to really get a grasp on, okay, my strategy works. It's just a question of how many times it actually lines up, which actually brings me up to something that I want to discuss in a minute. But first, we're going to take a look and see what we have going on here. Current price action is actually what I want to mention here. The current day-to-day price action is confusing a lot of traders. There's really no other way to put it. We had price action, and you'll see in my SPY call for the morning from last week and coming into today, we had two very big, heavy down days last week, and then followed by two inside days, technically not inside of each other, but inside of the previous big down day. And I'll look at the chart in a second. I'll show you what I mean. Actually, you know what? Let me just pull that over for a second. Essentially talking about these 2 days here. So essentially we had pretty big down days on decent volume, 150, 180 million shares, had basically a doji right at what is a major support level in the SPY. And then the next 2 days kind of drifted inside of this here. And a lot of people expected for the market to basically roll over, especially when we were trading. We were actually trading pre-market of this day. We were trading at 193.50 pre-market, so we actually kind of drifted higher and then actually gapped up here. Then the weak jobs data came out, and we actually got crushed quite early. And we were down here just about when the market opened, and we had this trend. So this is actually what's confusing everybody, is there is a structure of price action in your head where you start to push down, and you push down on good volume, and you pull back on light volume, and you expect it to roll over. You get the really nasty number pre-market. Again, we were at 193.50 and got whacked, and then opened lower and actually ended up having this big engulfing day. Now, this day alone threw a lot of people off, and there's a reason for it, because in the big picture, and again, we're going to look at the SPY big picture, and this is a point that I want to make that I drilled into everybody in our live trading room this morning. Very, very simple. The market is not in a trend right now. And I want to basically put some context on that. You can see clearly here, we're trading basically between 188 and 200. And this is going back to, let's call it the China meltdown, right? Now, if you take out the China meltdown, or which, you can't take it out, but we got to put it in the context of the bigger picture. Okay, so we bounce a little bit, and now we're trading in this range roughly for about 4 weeks. Okay, maybe 3 weeks, right? So we break out of this range to the downside, and now we're in another trading range for roughly a week. We are not going anywhere. We're essentially in a 12-point trading range. So we had 6-point trading range, and then another 6-point trading range, topped off by what it's done for most of 2015, which is trade between 206 and give or take 213 or 212. So the SPY for this year, other than this meltdown, again, you need to take yourself and put yourself in the picture of like, what prices are we actually trading at and how recent are those prices? So basically an entire year of a trading range, take out the China meltdown, and you're still in the same size trading range that you were in here, maybe just a little bit wider because of the severity of it. Now, what does that mean? It means that you have to stop driving yourself bananas thinking you have a good read on the market when there is no read on the market. That's the point I want to get across. Okay, here's the point. The current day-to-day price action is confusing traders because they're trying to put it in the context of the bigger trend. There is no bigger trend. I can't say that enough. This is a sign, if you're confused, to not trade. You must be disciplined if you have a structure for price action and it's not following through or it's not unfolding according to what that structure is. It should not confuse you. You should be saying, if it's not there, there's nothing to do. So these same traders who are telling me, they're texting me, instant messaging me, talking to me in Facebook, if it's confusing you, if what you normally look at is not a trade, if it's not unfolding, if it's not doing what you think it should do, stop trading. Stop throwing money away and guessing on positions and putting on longer term positions. There is very little long-term bias right now. Oil should have bottomed out. It didn't. It's going higher. At the same time, airlines were going higher. A lot of stuff that we normally look at is not in sync right now. If you plan to be a long-term profitable trader, if it's confusing, that means one of two things. It's not matching your current model for price action, and you just have to wake up and say it's not there and do nothing or do less. Or if it's confusing and it doesn't matter what it's doing, you don't get it, it means your strategy is not specific enough. Either way, stop throwing money, good money after bad money, and get in cash and get your head back on straight. And I'm saying this emphatically, which I just said to somebody about a half an hour ago on a private call. I have seen traders, talented traders, who are confused about the price action, not stop, and blow their accounts up in a month because they continue to trade what was either a potential change of trend or a market condition that didn't match what they normally do. So, for example, somebody who likes to be long and bullishly long, you're going nuts right now because you're not getting any follow-through to the upside. Somebody who likes to short, well, the whole year, the market has pretty much been in a trading range. And again, I've been calling this the great trading range of 2015. You have to put it in perspective. Is this a head and shoulders top? No. Maybe you could say that a little bit in the diamonds where you pick out a middle part here, but I don't think it is. It's a trading range. We are in a trading range. So again, I'm not harping on this because I don't have nothing else to talk about. We got plenty to talk about, but if you're watching this, you care about your trading. If you're in the market every single day, you care about your trading. Okay, so to pull it back up here, if you're confused, it's a sign not to trade, to get into cash. Do not let yourself be one of these traders that is just saying the market's open. I hear the bell at the beginning of the day. I hear the sound in the background. I have to do something today. No, you don't. You have to trade when your edge is unfolding and you let everything else go. And then the next step that you want to get to as a trader is when it's unfolding and unfolding well, and you have multiple stocks doing exactly what you thought they would do, especially if they're in the same industry or sector, then you trade a little bit more aggressive. Those are the days you can't make 500 when there's 1,500 on the table to be made. Again, just using round numbers. So I can't emphasize it enough. If the market price action is confusing you, it's either you don't know what you're looking at because your plan or your strategy is not clear enough, or it's not there even if your plan is, and you're trying to mentally fight what you hope to see versus what's there. And that could be a very expensive battle. All right, so here's the map that we're looking at on Friday afternoon at the end of the day. Clearly, the market just exploded again. We were trading all the way up here at 193.50, got pummeled and got pushed down. Now, the one thing that was interesting on Friday that we saw a little bit today, in the first 90 minutes of the day here, market continues to gap down, basically trade lower. At that time, the trend reading was actually trending lower. Now, if you don't know what the trend is, it's upticking stocks versus downticking stocks combined with upticking volume versus downticking volume. It does not lie. It's price action and volume, and it works inverse to the market. So the trend at this point was actually trending down after the market gapped and was going sideways. Now, there's absolute numbers in the trend that matter, 0.8 and 1.2. However, in this case, and in most cases, you're looking for the trend of the trend. And the trend was actually calling the fact that we were going to rally here. Now, did the trend call how much we were going to rally? No, it was a little bit overdone, in my opinion. But what I'm telling everybody and what I'm trying to do as best I can in my own trading, you have to trade what you see, which essentially means right now, because the long-term picture is not clear. Now, yeah, you could absolutely make a case that these moving averages are pointing down in the SPY. You can absolutely make that case. However, if it's not for these 4 days, what's going on in price action? So something you must learn to recognize as traders, how much price action history is behind my idea. If I want to be long or if I want to be short, how much price action history is behind it? These moving averages are pointing down because of these 4 to 5 days. That's it. Other than that, we'd be up here, it would be flat as a board. So you need to say, if I'm short, there needs to be price history. And right now, there isn't. These moving averages are pointing down because of 5 days. That's not a lot of price action. So the call heading into the day, SPY took a beating pre-market on Friday. So we're looking at Friday morning after the week jobs was revealed, right? Stock market set up absolutely perfect for a bearish day into the weekend, right? So here's what we're looking at. Coming into this day here, we're all the way up here pre-market and we get crushed. So we have 2 solid down days, 3 days of indecision, a little pullback, doesn't come close to testing up here. And what happens? We get crushed, and we're trading now down here at the bell, and we're all set to push down to make new lows. Well, Nope, not so fast, right? Traders bought the market, implying an interest rate hike now looks likely for the short term, right? So the SPY ends up posting a bullish engulfing candlestick on solid volume. Now you got to be going into today saying, now what, right? So let's put together. Here's the bullish engulfing candle, completely surrounding and a bullish candle with good volume. So you're coming into today saying, now what? Well, right around where we closed on Friday, we have the 20-period moving average, give or take a half a dollar, right? We have this resistance level, which was support a couple of times here, right? Resistance here, resistance here, resistance here, support here. So this is a significant number, 194.50, let's call it, right? So we're right around there. You expect to come in today with this high, the 20-period moving average, and Friday's high being some sort of resistance. But no, we end up gapping higher. Not only do we gap higher, but we never even sniff pulling back. So what can you be saying at yourself? Well, I was talking to my friend Rick today, right around this time, and all we could say was this is the exact spot where a lot of traders get whacked. I'm going to use the word. This is the only way to word it. You're up at this point and you're saying, well, the SPY is slowing down after it's done all this. It should have rolled over. And guess what? Now it's going to finally roll over. So you're going to put on a short here. And what happens? There's no reason for the short here. What are you seeing in price action here for the last 2 days from this big reversal, this morning's gap, and price action holding well above the opening price to want to put a short on there? It's a fool's play. And I flat out said it in the meeting today in the live trading room. I did it when I was younger, when I first started trading, and it is a sucker play to get your money taken out of your pocket, because you could manage risk on a short sale doesn't mean it's a short sale idea. There's a gigantic difference. So to bring this all home, SPY is in a 6-week trading range, and we're still trading day to day. There is no other way to look at it. As I just explained, the SPY and price action there, both with the China meltdown, 206 to 212. Now we're trading 188 to 200. Okay, so this means, okay, all key moving averages are in a downtrend with the aid of those 5 days. If you are long or deciding to be long, which clearly we made that decision today, because not because it gapped, but because it stayed there. That's the big thing. All right. Because of the gap, this means you are making day trading decisions against the short-term bias, which is nothing more than those moving averages pointing down right now. Okay. So you got to put the picture in context. All right. No other way to put it. You are trading with short-term biases because of this 5-day push to the downside. Other than that, you're in a trading range. So the point that I'm making is you are in day trading mode. There is no other way to say it. The traders that make the big money are understanding this is where it should have rolled over, but it didn't. If it did, they would have hammered the shorts, especially if it got through here. And hammered means more shares, hold longer, and more share size per position. It didn't happen. So you're trading against this most recent price action. You reduce your share size a little bit. You take what's available, and you certainly don't add aggressively, despite how far the market actually moved up today, because it's not a high probability long. It's a day trading long, and you're getting your facts off of today's price action, yesterday's high, yesterday's low, and the fact that you gapped and stayed above the opening price. You must make the distinction between day trading ideas, which most scalpers do. They only care about that intraday 15-minute trend, or even, to take it even a little bit further, they're only looking at the current hour. So if this hour is green, I want to be long. This hour is green, I want to be long. This hour is red, I want to be short. It's a way of trading, and that's all you're doing right now if you're calling out trades on a day trading basis right now. So let's get back to the intraday time frame and just take a quick look at some of the ideas. But again, I can't stress enough, the whole reason I started out with this, if you're confused or if it's not the market model according to the price action you normally trade, stop trading or get in cash. Don't throw your money away. The bell does not mean you must trade. The bell means the market's open. Okay, very big difference. All right, so what's actually my notes coming into the day? Bullish engulfing candles all over the place. So we had that big gap down, big reversal day. So this is heading into today, right? Bear flags are not hard to find. Okay, very clear. A lot of the other stocks are in a long-term downtrend, not necessarily the SPY that's a screaming sideways to drift down, right? The only problem with wanting to be short in these bear flags, conviction on the short side is low because some of them are one-day pullback or at or near support. So here's what we're looking at today. Coming into the day, short sales are either one-day bounces, which was Friday, or they're at or near support, which makes the reward potential a lot less. So the short side didn't make any sense either. So the short side didn't make sense, and the long side was only a one-day play. So on the bullish side, many stocks above key moving averages only, though, but not close to be considered an obvious uptrend. McDonald's is a good example. We'll actually get into that. So here's exactly what I told everybody in the live trading room today. I'm in day trading mode. Pull the plug on any trade that's not working out, not looking to build positions and not looking to hold longer. Okay, not sure a stock trader can see anything but bearish setups or trading ranges, and that's exactly what I meant. So if we just look at that McDonald's chart, I'll basically show you exactly what I'm talking about there. All right, so here's the chart of McDonald's. Now, a inexperienced trader would look at this and say, "Wow, 52 week highs." Absolutely in the long setup today. Absolutely. However, can you look at this? And let me zoom this out just a little bit. Can you look at this right now and say buyers or sellers are absolutely in charge of the stock for a long period of time? No, you can't. They're in charge from a month ago. It's a month worth of price action. So you don't have the, and I'll actually show you the opposite of that, which is Wynn. Wynn has been in a downtrend for a year and a half. That's clear, obvious order flow where you can sink your teeth into it. And you can see on the daily charts, there were plenty of really good, solid moves to the downside that were red candles. So McDonald's absolutely along today based on Friday. Okay, Friday closed well, 20 periods moving up. Look at these moving averages. They're sideways, coinciding with the market trading sideways. Now, this leads to another trading idea. The question we get all the time, now, actually, one thing you're going to ask is why is this here and not all the way up here? Well, that's something else you need to actually be able to figure out as well. You need to look at price and see what problem is price having a hard time with. Keeps getting above this level, just about 100 and coming back. Gets up to it and pulls back. Gets up to it and pulls back. That's the real number, not up here. What's the number it's struggling at? And right now it's 100. So we gapped up, got above 100 and above this level. Now, here's the question. Whether it's a day trade or whether it's a longer term trade just like this right now. The question is, we get above resistance. How soon do you buy or sell short on the other side once it punches through a resistance? And the answer is exactly what I just said to you. The more obvious and long the bias heading into a breakout, the sooner you can buy the breakout. The less obvious heading into the breakout, you wait longer for confirmation. Now, because we were in day trade mode today, we weren't necessarily making a decision on the long-term picture, although we cleared the $100 level. Now we're trading based on yesterday's high, yesterday's low, change from the open, which that made McDonald's a very solid day trade today, not a very solid longer term trade, because now we're up to resistance and we're going to see now a day or two if it can hold above that level. The way it's been trading all year, it's probably going to sell off tomorrow based on what price action has been doing here. So you need to make the distinctions between when to hold, when to add, when to be aggressive, and when to be in cash. If you can't see that in price action and look to the left and say, okay, I want to be long today, am I looking at just from yesterday, which is what a lot of stocks did? And actually, let me pull up, I'll just pull up a chart, right? If I want to be long, am I looking just based on what happened yesterday? Am I looking based on what happened the last month? Am I looking what happened the last quarter? How many of those pieces of the puzzle are in my decision? If more of those pieces and more time are doing the same thing, then I have a really good idea I can continue to trade aggressively. If fewer of those things are on the same page, moving averages are sideways. Well, the 20 just turned up based on the last 2 days, but the longer term period is neutral. So that means you're just trading with the most recent price action, and that means that your decisions now become day trades. The longer term on your side, the more aggressive you could be, and you can hold those trades a little bit longer. So taking that a little bit deeper into actually looking at some of the setups today, the bullish ideas were actually getting longer, and this is the interesting one that really tells you the short-term momentum, not necessarily long-term order flow, but the short-term momentum has increased dramatically. This is above the 20-period moving average, positive for the last 5 days, and closed 2% higher on Monday, also with at least 2 million shares traded, an average true range of $1.50. This list is dramatically bigger than what it was last week. And if you take a look at that same list on the short side, look at that. Only 2 stocks compared to probably 30. So that alone, now again, look at this list. You won't necessarily see them all in uptrends. And I just point out real quick where to find them. You go to the website, tradingeducationblogs.com. Go right over here, and you'll be able to see this entire list and how it all played out. But get in there and get a feel. And this is something you need to know as well. When you're making your list during the day, you need to scan through a lot of stocks to notice stuff like this that you won't necessarily see. If you see the size, and we had this like 3 weeks ago, where the size of the boat was shifted all to the short side dramatically. Now we're looking at stocks in the last 3 to 5 days, 2 weeks, dramatically shifted to the long side. So we're seeing the change in flow. Now we go down to individual stocks, and tomorrow we look to see if we get a third day of follow through. The problem that a lot of stocks are going to have tomorrow is that now they're pushed up into resistance levels and have traveled quite a distance after a 2-day window. So we're still in day trading mode on the long side. The short side, you need to find some individual stocks that might be setting up. And again, some stocks like Wynn, which has been in the list for a while, positive, strong 2 days. It's kind of off the table now because we're seeing really, really solid volume on pushes higher. So we're probably seeing some sort of capitulatory volume. What we'll be able to see now, though, is if this continues with really high volume and it's quick, it's probably short covering. If we go higher and go sideways on heavier volume, then it's accumulation. So that's going to be pretty interesting to see how it plays out. So again, I cannot emphasize enough, and I want to keep bringing this up because as much as this is a trading recap, we want to make sure it's a mentoring lesson too. If the price action is not matching your model for what the market should do, stop trading. There's no reason for making it the most expensive form of keeping your ego intact. If it's not matching what you want to see, get in cash and be okay with that, or be very, very diligent and just trade some of the stronger stocks that are unfolding and doing exactly what they're supposed to be doing. Interestingly, Nike actually opened higher and pushed higher, but right out of the gate, one of our main indicators, for lack of a better way of putting it, is the opening price. It should have pushed higher, held the opening price, and within the first 20 minutes, it was actually below the opening price the rest of the day. So you really need to dig in, take a look at what stocks are following through, which ones aren't, put those in sync with the longer-term picture, look to the left and see how much price action is in the same idea as the position you want to be in now. And if you don't have the position, here's a great way to explain it to yourself. If I didn't have the position, would I want it? Ask yourself that before you put the trade on. If the answer comes back no, don't put it on. And if you hesitate, don't put it on because now you're trying to talk yourself into the trade. So if I didn't have it, would I want it? Have a great night.